Good evening, everyone, and welcome to one of the final panels of TEAMZ. I hope you've enjoyed it so far. My name is Nate. I lead global marketing for Emergo, so we're a co-founding entity of the Cardano blockchain. You may have seen the booth just outside there with our builders presenting. I think today we're talking about a very important topic, and the title, as you can see, is focuses on the $1 trillion opportunity. I think the $1 trillion honestly isn't an exaggeration. When we look at gold alone, $13 trillion, moving even a percentage on-chain allows us close to that mark. And luckily today we've got 4 people who are very close to building, regulating, expanding, enhancing liquidity for users who ultimately could and will use tokenized assets on a day-to-day basis in the upcoming years. And we're going to talk about different asset classes. We're going to talk about regulations. Hopefully we'll get some spicy insights as well from regulatory frameworks and how markets can have their nuances in terms of localization. So I think what we'll do is we'll just kick off by allowing the panelists to introduce themselves.
Everyone, my name is Elena, and I'm representing Gold Dollar USDKG. So as a recently launched project, we came to Japan to explore the market, and we are looking for promising partnership and meaningful collaboration here. Thank you.
Hello, everyone. I'm Jesper, the COO at Midas Labs. We're building the ecosystem and also the infrastructure for the digital gold token, GoSip, for the Hong Kong Gold Exchange, who has been operating for over 115 years in Hong Kong, and the only recognized precious metal exchange by the Hong Kong government.
Good afternoon, everybody. My name is Andrea Perin. I'm the Deputy Chief Representative of Banca d'Italia here in Japan. We cover not only Japan, but also Korea, Taiwan, Australia, New Zealand, so all the developed economy here in the APAC region. Hopefully, I'm seated here like a villain, no? But very much interested to hear more about the project of the different panelists, and also bringing a little bit of clarity on the regulatory perspective. Thank you very much.
Hello, everyone. My name is Mike Neet. I represent TEAMZ. I'm head of the Americas. We are a Web3 company focusing on DeFi, GameFi, RWA, and also prediction markets. I hope today the discussion is going to be fruitful, and I'm pretty sure the panel members are going to contribute nicely to our talk. Thank you.
Thanks, everyone. So why don't we start, let's start fast. One sentence from each of you. What is the single biggest opportunity in RWA today?
Thank you, Nathaniel. As for me, I see that the biggest RWA opportunity today is transforming gold into the usable, globally digital dollar that we are doing in USDKG right now.
Well, to me, it's gold as well. It's a 31 trillion asset class. But now they're all sitting in the forts doing nothing. So I think making gold productive will be the biggest opportunity.
You can see I'm already in a minority, but allow me, I don't want to disappoint such a distinguished audience, but I do believe that the big deal for tokenization is still TradFi. It's still corporate bonds, is government bonds, is shares, mutual funds. So don't be misled only by a narrative where are only exotic assets. Actually, from my point of view, the real the gateway will be still the traditional financial asset.
For me, I would disagree with gold. For me, the biggest RWA opportunity would be something like sport tickets, real estate, because gold is usually just held. It's not something that is liquid. Most people buy gold and then they will hold the gold for quite a long time. If you want to have more RWA usage in everyday life, we need to make it more common and use it every single day. And the first thing that comes in mind for me would be something like tickets for like concerts, sports events, etc.
Okay, I think this is great because we have a good dynamic where we have opinions from different asset classes, from the use of TradFi to retail utility to typically assets that people would shift to hedge risk, such as gold. Why don't we just touch on gold initially? Elena, Jesper, you're both working with gold in terms of reserved back tokenization. Why don't you tell us how it differs between how you both build and utilize gold as that kind of opportunity within tokenization?
Thank you. I would like to say first about our USDKG because we are building completely different use cases, and we are not directly tokenizing gold. We are using gold as a reserve to back our stablecoin. And actually, this is bringing us into the level that we are using the value of gold and efficiency of blockchain to combine it together and bring the new settlement and transaction instrument to the market, to the global market. As I see that mostly RWA companies, they tokenize price of gold. And we do not tokenize the price of gold. We actually pegged one-to-one to US dollar and backed by gold. Also, we have the difference that we are the first world state-backed company. So it means that we have 100% of our shares under the Ministry of Finance, and we are building the new settlement instrument for global trade, for businesses that can use our instrument for treasury management and DeFi collateral liquidity.
Go ahead.
Yes, I think Elena's project, Gold Dollar, serves more on payment, on settlement. But for us, our tokenization of gold for our product Gold SIP is more for investment. So it's a sort of value, but it provides the convenience so everyone can buy gold, institutional grade gold. And with Hong Kong Gold Exchange as a credible and trustable source, we do all the assaying, we do all the storage and all the logistics. So you don't have to worry about if the gold is the real thing, if where to store it. And they can just buy on their phone, online, easily, 24 hours 7, and everyone is accessible and fractionalized, so you can buy $1, $10, even $100. And if you want to redeem the real thing, you can do it at our exchange or even some designated locations in different jurisdictions with our partners. And it's basically buying real gold, but much more convenient. So it's an investment, but not a settlement or payment use.
It's great, no, and fascinating also to see how, through technology, you are able, to make smoother the process of owning gold, or in any case creating a stable coin. My big question as here I'm a regulator, would be how you ensure that there is enough liquidity, in the instrument you are creating, you are issuing, because also bringing from what I understand from the Japanese market that is very much advanced on tokenization of traditional finance assets. The big problem come actually on the secondary market, more on the instruments. So do you have any, maybe you can share any experience regarding this? Because I would be, for sure, tokenization should make trading and settling faster. How you are able to achieve this?
It's a really great question. First of all, I would like to say that as a just recently launched project, we started with 50 million of our market capitalization. And within 12 next months, we are going to grow up to 500 millions of market cap. It means that for us, we are going to bring liquidity of gold, and as well we are using USDT as liquidity. In the case of liquidity growth, we are not competing with the international significant measure stable coins. For us, we are mostly focusing on cross-border transactions and building the infrastructure to connect Central Asia to Southeast Asia, Asia, MENA region, and Turkey. So It's mostly we are focusing on allowing businesses to have a trustable, transparent, gold-backed stablecoin for the transaction and business purposes. And we are starting small now, but we are going to grow with the demand. And now we see the demand and the institutional interest that we have from potential partners, investors, and those corporates and businesses who would like to use our stablecoin as a settlement instrument first.
Thank you for that, Elena. I guess,
Um,
sorry, just
uh,
zooming out for a second on your point, Andrea. When you, instead of, as opposed to gold specifically, but for all tokenized asset classes, what learnings can you take from the European regulations which can almost enhance liquidity globally or allow us to be more sustainable?
Yeah, as I mentioned, probably is the audience is already aware, no? But also ECB, the federal system of national bank at the euro area, we have started fostering also adoption of tokenized asset. And one of the big things of tokenization of the tokenized asset has been that they were priced less competitively than traditional market finance, the traditional financial asset. This is why one of the reasons that we identified that was not eligible as a collateral, and this has changed as news of as of 30th of March, ECB will be able to accept tokenized asset for refinancing operation. For the time being, obviously, the requirements for creditworthiness are still there, so will not be eligible cryptos for sure, but and will be only for non-native tokenized asset. But this is a first sign because once you are able to pledge as a collateral also the corporate bonds or the real the rates unit, then the gap between the tokenized and the traditional asset will narrow down. So take this as an opening of the ECB on also this market. It's actually something that we really want to see. And then if I may add just a bit, is on the ramp also the Pontus project. It means bridge. What we are aiming is to ramp off, to settle transaction directly on the blockchain, and this will be great, because both the IMF, OECD, but also other European agents converge the idea that to really foster and open and take advantage of the potential of tokenization, you really have to settle, to have also the settlement leg in the DLT, and this will be possible very soon thanks to the Pontus project.
I agree because you mentioned that ECB allowing DLT assets as a collateral, and this brings trust to the industry or to the players in the industry that they can bring capital into the market because it's backed by central banks. And we kind of do the same thing in Asia because we have the backing of Hong Kong Gold Exchange as well. So that gives credibility to the users. And we're not trying to build something from scratch, but we are trying to extend what our existing network, but on a new digital rails. We're doing already like 30 billion trading volume per day. So we're bringing that volume on chain. So we're not building something new, but existing that solves the liquidity problem.
And lastly, just on the topic of liquidity, and I think, Mike, you have some opinions on this in terms of your coverage and working across the Americas and your platform.
Yeah, so we're talking about RWAs, right? In my opinion, the main problem when it comes to tokenization is the illiquid market, meaning that people just don't use the products enough, right? So something can, like, if I explain this like in layman terms, something can have a value, but if you cannot move this to other markets or like sell the product thing, it doesn't matter how much tokenization is in place. We need products that can actually breach the markets and make everyday life easier. That's why before, when they mentioned gold is the best RWA opportunity, I didn't agree because like nobody buys gold just to hold for like, I don't know, 1 week, right? The best option for tokenization would be something that we can implement, such as tickets that I mentioned before. So meaning that that when we have something liquid, everything is going to be much easier. Illiquid markets make finance much harder than it should.
Absolutely.
Allow me just
Go
to
ahead.
quickly follow up because I do believe that's a really sensitive topic. You know, we have seen that we have different views regarding the kind of asset that can foster or can take advantage of tokenization. But allow me also to stress the fact that when we talk about tokenization, is a story also of the infrastructure. The underlying infrastructure we saw. I was in the audience before with the panel when talking about Ethereum. Now there's a crypto-led project that is serve as a base for tokenization, but also central banks are also. We do believe that the infrastructure is core for tokenization, and this is a public good. So that's why is within our realm also to provide, also enabling interoperability, also enabling fostering innovation from the private sector, but granting still a public infrastructure to which everybody can rely on, and trust is a prerequisite for every profitable business, allow me to say.
I would like to add to Andrea's opinion that, for example, in Kyrgyzstan, we have regulation in place, we have infrastructure ready, and what we are still missing compared to SBC, that what just recently was announced, that our central bank is not recognizing asset-backed stable coins yet as a settlement and as a collateral. So maybe for our practices, we need to understand that we need to learn from each other from a different perspective and markets. We have really fast moving regulations in Singapore, in Hong Kong, in Japan, and we see that stable coins are already used in place, and it's we can say it's already have some kind of adoption here. So for stable coin like us, we are looking for more to the markets like Hong Kong regulation, then Japan and MENA region, Turkey, because these regulations really give the opportunity to move for innovative products really fast and forward. And of course, there are a lot of things to be in place, like compliance, mass adoption, and adoption from businesses, because we, as USDKG, we are focusing more now on B2B type of trade. And we also would like to establish this collaboration in this region too.
Me to, again, briefly follow up, sorry for this, just a piece of advice. Technology is disruptive, regulation is not. So you need to have some time to adapt. What is really, and what you can bring also from the European experience is when we want to implement the DLT technology, we haven't changed abruptly the regulation. So going step by step through sandboxes, there is the DLT pilot project, you can have a, take as a model, just to adapt, because as I mentioned, regulations are there for a reason, is to preserve public trust, is to create a trustworthy environment that is core, again, for any business.
I agree, and always legal first, and then the infrastructure. And one thing I would like to mention about also the tokenization of gold is that what we're trying to do at the same time is to make these borrowing assets interesting again. And there's some statistics that I would like to share that's pretty interesting. Is actually tokenized gold market is sitting at around only 6.5 billion right now, but the asset velocity is actually around 30x. So we're talking about trading about 180 billion annually. But if we look at the ETFs, like the biggest ETF, gold ETF right now is a GLD. The annual trading volume is also around 180 billion. That's 1x about the asset under management. So we can see that the tokenization of gold actually opens up a lot more opportunities. It serves retail users, traders, investors, and whether you want to trade, buy and hold, or you would like to sell it right away, it serves all purposes. So it opens up a lot more opportunities.
Really good insights. And just zooming out here, so when, and each of you, applies to each of you, when you are speaking to regulated partners, for the audience, what are they saying that will enable them to accelerate? And any insights you can give us on what's holding them back? We saw stable coins accelerate and become one of the greatest use cases of crypto in the last cycle. And I guess that was fully embraced after a number of years. But what are you hearing from these regulated partners that would enable the next level of infrastructure to follow that path?
For us, it was the first regulation. The Kyrgyz law on virtual assets was established in 2022, and this year we had just recent update version. Government is really supporting crypto industry, and that's why Kyrgyzstan becoming a country in the region as a crypto hub is a very attractive point. And for us to bring the concept of state-backed gold backed stable coin pegged 1-to-1 to US dollar. It was a really strong convincement from our CEO and from our team that Ministry of Finance decided to support us and establish the joint stock company and issue of virtual assets, VR, and that's why we are regulated by not just the law, but also the government overseeing. So it means that every step we do, it's oversight by the government and the regulation of our local law. And every jurisdiction that we are going, every market we are going, we are trying to be compliant with local jurisdictions. Like, for example, recently we are planning to get listed in Hong Kong platform. And it means for us that we are fully compliant with local regulations, the markets we enter.
I'd like to add something to that. We are completely different branches of industry, kind of like distant cousins in a way. But I'd like to say that regulations play a pivotal importance when it comes to the investment markets. So, for example, we acquired SEC MSB license. So for us at TheoremX, it's the main importance that we follow regulations when we can. However, we're gonna pick a market that has less regulations. I'm probably not gonna agree with Andrea here when it comes to Europe. I think European markets are way too regulated, and it's not an easy area to do business, like in my honest opinion, right? And I'm probably not the only one that thinks this way. I do believe there's some new regulations that are upcoming, and maybe that's gonna change in the future for the better. But for now, the hub of investment would be mainly Singapore, Hong Kong, Korea, I'm talking Seoul, Kuala Lumpur, and Southeast Asia primarily when it comes to Web3. You do have some opportunities in the Americas, but you know, we still have some regulation that we have to go over. So that's what I wanted to add on. Maybe you guys don't agree with that, but we'll see, you know.
I must respectfully disagree. I mean, I know Europe is notorious for being regulating first, but the DLT is actually a case where we had actually shaped and choose to conditionally have a lighter approach for the DLT. So this is actually an example where we come out, I think, pretty strong. What I want to mention is that for me, what is really relevant, at least for advanced jurisdiction that have a really big set of regulation, is for sure Europe, but it's also Japan, as we are here, is to have a very strong business case. No, because we are here in Japan, in Europe as well, things are working also for the TradFi. No? So if there is a new bank, new companies want to come up with financial innovation, they are more than welcome, but this cannot come at the prejudice of consumer, of investors. We want to still keep the bar high for the protection of this category, but also really show us that what you are innovating for is really important. There is a really user case for this, no? And I know I can commit also for the other European jurisdiction on this. You are more than welcome also to come to Europe for to establish. And yeah, I know you may think about US. We have seen also Asia is very well equipped, but also the border in Europe can serve as a perfect hub for your company to be established in.
Yeah, I agree that Mike brought up the point that Asia is always more commercially first and then the legal groundwork next. But I think there is something always that we can learn from each other. And yeah.
Yeah, so given you're part of the bureaucracy, so if you're from Treviso, right? Yeah, okay. Perhaps you're gonna open a crypto hub or blockchain hub in Treviso, and I can tell my company to open an office in Treviso. That'll be nice, you know. Now everything depends on you.
Thank you very much for the trust. I mean, we will for sure welcome in Treviso, any other place of Italy, but also Europe. Just give us a chance. And yeah, I know. I'm seated here in a very uncomfortable chair, but I do hope I was able to provide more clarity also on something Europe is doing for this kind of business.
Thank you. I think we touched on asset classes, how regulation doesn't stifle innovation so much, but for at least forms allows us to kind of bring these innovations to protected, sustainable masses, and that's, you know, I'm British, so coming from somewhere that is heavily regulated as well, I do believe in that. We've got 10 seconds left, so I want to thank all the panelists for being on the stage and for showcasing your experiences and everything, and I hope everyone in the audience enjoyed it, and I wish you luck in the lottery that is coming up as well.
Thank you so much.
Thank you very much.